Alright guys, welcome back to the channel. Appreciate you being here. I wanted to share with you a trade that I took on the New Zealand dollar. I get asked a lot of questions about head and shoulders formations, and it's one of the systems that I have in my trade plan, but I only execute it once every now and then. It's a rare occasion. Okay, the opportunities on how I trade it come few and far between. But that's for a reason. When I trade them, I trade the very, very high probability setups, and I'm going to run through some of the things that I look at, how I took this trade. But so, although this is kind of a hindsight trade, I did go through this live with my guys in the live room this week, and it played out very, very nicely. But although it's a hindsight trade for you guys, there is another opportunity there as well, which I think is very attractive, and I want to talk through the analysis of that, the approach to that, and really the importance of just, you know, once you hit targets on a trade, not to stop looking for the next trade that meets your rules. Or even if you take a loser, the importance of showing up and continuing to trade the plan to make up for profits. So let's get stuck into the New Zealand dollar, and I'll show you what I was looking at. So this is the New Zealand dollar on the daily, and first and foremost, we had a big bullish run. Okay, we were bullish, and we finally held around 72.97. I think I did a previous video where we looked back historically, and we were approaching this structure shelf looking left, and we found some resistance at that level. Okay, now more importantly here, I don't really want you to get too bogged down with why we found resistance there. We just did, and more importantly, we started to put in this pattern here, which has some significance if you look down on the trading time frame. So we found some resistance at this level. I started looking down on the 4 hour, and I'm going to draw this out kind of step by step as if it was still playing out. Okay, so what you'll see here, if I bring on these trend line tools, you'll see that we had this higher close. Okay, then we had a pullback, then we had another higher close, which the trend continuation goes on. But then what you'll notice is, instead of just having a pullback, we pulled back right back to the previous support level. Now, whenever we do that at certain levels, depending on the level we're at in the market, it indicates that the market is decelerating. The trend is running out of steam. Okay, we're seeing exhaustion in that trend because we're pulling all the way back down to the previous outside return. It's not a strong trend. We're not kind of putting in just a 382 retracement or a small retracement and continuing with the trend. We're pulling all the way back down. So that's the first indication that we're likely to see a hold or a reversal or some consolidation. And what we look for next is how price behaves. And what you'll see is what happened next here is we pushed up and we respected the previous new high. Okay, so the new high before the most recent high, which in this instance sets us up for what we call a head and shoulders, where we've got the first shoulder, okay, and then we've got the head, and then we've got the second shoulder, right? And that's what we call a head and shoulders pattern. Now, what happened next was, if I just get rid of this trend line here, what happened next was, I said to the guys in the live room, if this level holds and then we break the neckline, there'll be a couple of opportunities for me to get involved. And I wanted to explain both of the approaches that I take on a head and shoulders like this. And the first one was, first of all, you have to wait for a break of the neckline. Well, what defines the neckline? That's the first question. What defines the neckline? If you're trading a system, you have to have an if-then thought syntax. It can't be nearly or almost. It has to be, if it's this, then it's that, right? If then, and that's how we have to create our trade plan, otherwise we'll lose consistency. So the way that I define the neckline of the head and shoulders is the lowest close to the lowest close. All right, so very simply, you're looking at the lowest close down in this neckline, which would be this red candle here, to the lowest close of this neckline here, right? Now, you'll see that this is slightly downward sloping. What I've found with the head and shoulders patterns is the more the slope, the more gradient of the slope to the downside on a bullish trend. So in other words, this is a bullish trend. The higher the gradient down the slope, okay, the higher probability of the setup. If it's a dead flat horizontal line, it's got a lower probability, and if it's got a gradient of an incline for the neckline, it has a low probability. In fact, I don't even take those setups, okay? So you can see it's slightly downward sloping. The gradient is probably, I don't know, 3-5% grade decline, okay? So we've got a decline there. We now make sure that we, whoops, let's get rid of this, let's get rid of these tools. Let's delete off one of these, otherwise we'll get confused. Let's delete off this one. Okay, so look, we draw out the line. We now know where we're looking for the break, okay? So first things first, we just sit on our hands. We're very, very patient, and we wait for the break of the neckline. Soon as that breaks, what we're looking for is a pullback and a retest of the neckline. And now we've got a defined neckline. We can extend that neckline across, okay, making sure that we're still on the same, same zone, lowest close to lowest close, and we're looking for a test of that neckline. Now, obviously, this is all hindsight, okay, so you can see everything, but look what happens as we approach that neckline. The first time we approach the neckline, we see it respected. If I zoom in here, you're going to see that we pushed up, and there was a bit of rejection at that neckline. Now, I enter very aggressively. My first chance order comes in. Once this candle's closed, I wait for the candle to close. As soon as we test that neckline, it doesn't matter if it's the high or the body's on the thing. As soon as it closes, I enter at next bar market, meaning that as soon as this candle closed here, this one with the green arrow, I place an at market short, right? So I sell the market at market, and what I do is work out the ATR of the market, the average true range at that current candle, that previous close, and I'll place a stop loss aggressively above the high. Okay, so if this is the high of the candle here at 71.73, I'll place a stop loss, an ATR, whatever the ATR was at that time, above that high, and I'll be short. Now the positioning for targets goes just down at the low. Okay, so if I enter on first chance entries, it's a one position trade. Okay, it's a one position trade, and I take my whole position off at the retest of these lows. Okay, now I have to be prepared to be stopped out. Okay, because I've got a second chance entry as well, and the second chance entry, which I was stopped out, you guys in my live room saw I was stopped out here, and this didn't play out very well, this first chance entry. But the importance of sticking to the plan is that if you stick to your plan and you take a losing trade, you have to get into the next opportunity to continue replicating your back-tested system to know that you've got a profit over time, right? Or to have certainty or some probability that you're going to produce a profit over time. So the next test is the test of the right-hand shoulder. So if I just bring on the right-hand shoulder here, you're going to see the little zone here. Again, it's anything between the highest close and the highest high. So this zone here, right? Now we had to be a bit patient here because I'd been stopped out. We pushed up, we didn't quite test it, started to consolidate, and then boom, we pulled up and tested that level. Now look how price behaved as we approached that level. Remember, this is my second chance entry, my final chance entry. If we violate this high, I'm no longer looking to get short again. So I get two shots. First is of the neckline, second is of the right-hand shoulder. Very, very similar approach, except look what happened as we hit this level. We can drop down to the 60, okay, and you can see on the 60-minute time frame how much confirmation we got at that level. We had this 1, 2, 3, 4, 5, 6, 7, 8 candles, 8 bullish candles in a row, and look at this, right? We had this high test pin bar, which indicated that we're very strong probability of rolling over now. That was followed by another, which is setting up for tweezer top candles, which gives even more confirmation, and at that point I got in. ATR based stop above the high, got in. If you're more conservative, we even had a double top here as well. We had a retest here, so you could have waited for the retest or the double top, which meant you would have got in roughly at the same price on this red candle here. But that is, you know, ultimate confirmation that we're likely to see a rollover. So that's where I got in. The difference on entering my second chance entry is I have two target positions. So I split the position in half, and I take two target positions. The first target position is at the low. Okay, so the first position would be at the low, the previous structure level. Sorry. So if I just draw this on, let's just show you. Let's just show you where the targets go. So first of all, my stop loss was above. I got in here, and my stop loss was an ATR above the high. So very, very tight stop loss. Okay, let's just make sure this is all accurate. This is where I got in, and my first target was just above this structure level here. Okay, so I was front running my orders by a couple of pips just to make sure that, you know, I had a higher probability of a fill. And then my second chance was at the previous lows. Okay, so my second order, sorry, the other half of my position size was at the lows. So where the original order would have been if I'd taken one position. So hopefully that makes sense to you guys. Appreciate it's a bit it's a little bit a lot to swallow, but this was the entire position. So as soon as I got triggered in at market 72.38, I then took off half of my position at 71.67, locked in some profits, rolled stops to break even so that I couldn't lose any money on the trade at that point, and then we just squeezed the rest out of the move by taking the secondary targets at the original target position had I got in on the first chance entry. Hopefully that makes sense to you guys. So look, I appreciate this is a hindsight trade. I wanted to show you it because it was a textbook example of a great trade that we took that is very kind of rare. So when they play out nicely. This was a big win. If you bring on the ruler here, you can see roughly there was 72 pips to target 1, and target 2 is 127 pips to target 2. So half of the position size was 72, 127 pips for the rest of the position size. So nice trade overall. What I wanted to share with you now, though, is the fact that, look, if I just scrub off all these drawing tools, we're now approaching the support level. Okay, so look, we bring on a horizontal line. I just want to draw on this horizontal line down here, and we are approaching that level following a big bearish run. 1, 2, 3, 4, 5, 6 bearish candles in a row. If we zoom out, you're going to see that this level has some significance as well. Looking left, you can see recently we held and respected that level twice. There was a double bottom here, and we're approaching that level after a strong bearish momentum. What that normally indicates is we're going to see some deceleration, and there could be an opportunity to buy again now. Right, so buying opportunity, just looking at target positioning here, I can already see that I'd be looking at taking targets around this inside structure zone here. Okay, so we don't want to be greedy, we don't want to expect another rally up to the upside, but we want to capture that high probability rally that's likely to come following this setup. So this would be my target zone. Okay, this would be my target zone, and now it's just a case of going down on the lower time frame zones and lower time frames and waiting for a setup. So for me, this would need to be a little double bottom here. Okay, I'd need a little double bottom. I could use a 15-minute time frame entry for that double bottom. If you're a structure-based trader or you use some kind of confluence system, you could start actually building out a case for entry and scoring this. So for instance, you might bring on a ABCD pattern. Okay, so you might measure that out, and you can see that completes right down there as well. So you give yourself a certain score for that, or a point for that. Another thing you can do is bring on an extension, Fibonacci, for you Fibonacci users. I know many people, many of the traders in the community use Fibonacci. You can see you got a 1414 extension lining up with that equal measured move. You could look at RSI. You can see RSI is starting to go oversold. You could look at a double. You could look at a doji candle, whatever it is. But you could start building out your case for entry for confirmation of this high probability move. So if we do get a double bottom here, you can see that I could get tight, potentially tight stops down here, right? So my stops might look something like this based on an ATR. Again, I'm going to have to be a bit patient here because this hasn't played out yet. But you're going to see that if I just bring on this long position and measure this out, just say, for example, that this is my stop loss position and this is my target, what, we're getting a 2.3 to 1 reward to risk, which is pretty decent. That's pretty decent for a little day intraday trade here. So that's what I'll be looking at. I don't want to talk too long because I want to get this out to you guys before this plays out. Hopefully you got value from this. Let me know how you trade head and shoulders. Let me know if you've got any questions on this. Let me know what you're looking at in the market right now, and let me know if there's any topics or any trading ideas that you want me to look at or give you guys as part of this channel, and I'll be happy to do so. Until next time, good luck in the markets. Remember, consistently profitable trading is about trading a plan consistently. Clues in the title. Appreciate you for watching, guys. Take care, and I'll see you in the next video.